It's so much fun always coming back to TCS headquarters that sometimes when you are getting into informal chats, we always get a sense of where the mood is. And we were just laughing, Avan, before we're getting ready to go on camera. That just tells you that the world may think the quarter was bad, but here the management is saying that it's a very soft kind of an patch, and they're fully confident of how things would move. So let me now bring on board the CFO and head of HR, Milind. Ramki, gentlemen. Welcome and thank you for joining us. It's your first time I'm actually interacting with you. It is not your first time with ET now. So thank you very much for joining us. Nice to meet you. There is good news on attrition front. You've added record employees for the quarter gone by. I asked this question to Rajesh, but I'm going to ask you again, which is that one side there is slowdown, second side there is employee addition. What should one look at?
We have a talent revolution going on in TCS and in larger country as well, I will say. People are excited to basically learn new technologies in the context of industries and really building a foundation for their careers. And we look at it as an opportunity for us also. And since it is very clear from our actions that we see growth in the future based on our overall pipeline, based on our order book, and we are very confident about that, and that's why it's important to basically plan for it.
Okay, just to get the number right, if I assume that this same run rate will continue in H2, looks like you will cross your gross borrowing number which you gave at the beginning of the year?
You mean the
employee addition?
Employee addition. See, we already have 30,000 people on board, not offers, 30,000 people on board today. So we will actually now, going forward, we'll make decisions based on the business situation.
No, my question is that you always give at the beginning of a year a gross number.
Yeah.
If I look at the run rate what you had in H1, and if I assume that you make the same run rate, you're likely to cross it. For me, that is an indication of optimism.
That's what I'm saying. I'm actually telling you that we have now gotten these people, and going forward, we'll make decisions based on the business situations.
Okay, fair point. I should read in between lines here.
Yes.
Ramki, margins.
Yeah.
It is reaching that level beyond which investors would raise a red flag.
So let me, we need to put it in context. We definitely anticipated higher growth, and we said that about 3 quarters back that retail seems to be bouncing back. There were good signs, but we have also been surprised at some of the softness which has got into retail in this quarter. BFSI has been a little soft and muted. So the growth has not been in the same level as what we expected. But as Milind said, the hiring has happened and we have added people. So obviously there is a little bit of mismatch. So that can cause a little bit higher costs without commensurate revenue. So that's a very arithmetic, and that is short term. Our TCV, the order booking in this quarter has been very strong, and it has been strong in the last 4 to 5 quarters, and our deal pipeline is also good. In addition, if you look at metrics like the client metrics, across the band we have been adding the number of clients. So which means that the basic soundness of the model is very, very intact. So these temporary blips would be there. So with the growth to come back, I think the margin will be protected. Number one.
Number 24% is a threshold.
No, in fact, we should be better than that.
You will not go lower.
We should not go lower.
Even if softness continues?
We should not, because the second is, of course, currency. Currency is important. We have had a situation where currency help has not been there. The help is not in terms of it directly flows to your bottom line, but it is important to take care of the inflation and the increases, etc., which you have, because structurally that is, I think we have covered that sufficiently in past interactions. So that is intrinsic to our model, and when you have a continuous period of either a flat or appreciation, so that also contributes. I think these are the two fundamental factors, but otherwise many of the other indicators, the investments which we have been doing in terms of the type of wins, the type of transformational deals which we are engaged in, as well as winning, and also the broad-based presence and our deep relationships which we have built with customers. These are all very strong structural factors for margin expansion. So
is business coming at, so new business is coming, deal pipeline is strong, the order booking was robust for the quarter gone by. What I need to perhaps understand, Ramki, for the benefit of your shareholders and my viewers, is that is business coming at a good price, or there is a numbness in the billing trend?
it will always be a mixed bag, because we are also working in a competitive situation. So
the safest answer.
sometimes
Mixed
if,
bag is like you say, acha bhi hai, kharab bhi hai. What is the sum total?
I think it is a stable environment, but there will always be pressures, because sometimes competition can be very irrational, and you'll have to counter that. So our strength has always been in terms of delivery and execution. So sometimes you'll have to make some of those choices. So, but it is not an across the board matter.
Fair point.
Yeah.
I'm just working with the assumption that there is a little bit of softness in the business you continue to hire, which means there could be a possible change in your utilization rate. Utilization rate is a lever which IT companies have used in the past to increase productivity and take up their margins higher. What is happening on that front?
No, see, the point is, this is a strategic decision we made, right? We actually made a decision. We said that we will have front-ending this time, front-loading this time, and that has an impact on some of the margins. He has to respond some of these questions because of the changes, some of the changes we made on the HR side, and so that overall absorption of these people who are currently getting good learning environment in the system will eventually get deployed.
So when will that kicker come in because of high utilization rate?
No, it would start happening
immediately.
It would start. The people will start getting deployed from Q3 onwards.
Okay.
How many will happen in Q3? How many will happen in Q4 is something which we will decide.
Would you like to share the number for utilization rate for the quarter?
We don't share utilization numbers.
Yeah, but it can inch up more than where we are.
Yeah, I'm just trying to understand that where that kicker for TCS margins would come from.
Yeah.
One would be billing, second is environment, third could be utilization rates.
Yeah.
Utilization rates, obviously, I think the fact that because of the front ending, the utilization obviously would have an impact, and it will improve as we go along.
Ramki, just to clear the air, what will be the impact of the new tax law for TCS?
Neutral, because currently we are in where we are use some of the exemptions, tax exemptions, etc. As a result of it, our effective tax rate at the parent company level is lower than the reduced rate, right? While the reduced rate is a very welcome move. So for a few, maybe for some time to come, we would not really look at switching to the new regime. We will keep evaluating that as we go along, but at this point of time, it is neutral from a tax rate perspective. There are some minor things which, in terms of MAT, etc., which are beneficial, but they are very minor.
So there will be no change in cash flows?
Because of MAT a little bit, but they are not material changes. Yeah.
The number of the quantum of dividend which TCS has given in H1 already is about 16,000 crore plus. This was the same number last year which TCS used for the buyback. So if buyback is not there, dividend goes higher. Yeah. Very simple to understand.
So we have always said that in terms of returning to cash to the shareholders, 80 to 100% of our free cash flow, we will do that. Barring certain, if there is a specific
What was the number last year, Ramki?
We were about, I think, 94%, if I am not mistaken. That 94% is including dividends and buyback. Okay. And we have always said that it will be a combination of dividend and buyback, and depending on how things work. Currently, we would believe that a dividend makes more economic sense for us than a buyback. So we have chosen this option. But these decisions can always be subject to review at every appropriate stage, and the board will take a call on that.
Okay. Couple of years ago, TCS started retraining their entire skill. The idea was to migrate the old skill to a new skill, which was digital. Digital is now the heart of the business for TCS. What is happening on that front? TCS is in the business of increasing productivity for other companies.
Yeah.
So I want to understand what is happening at productivity level, what is happening at per employee level in terms of the revenue which you are getting and which you're projecting now.
No, I think, let me just tell you some numbers. Basically, we have...
Finally, some numbers.
Yeah, we have trained 390,000 people on Agile, 320,000 people on digital. These numbers are unprecedented. Never happened in the industry, never happened in the globe. So I think if somebody has to, basically, if a kid coming from school, coming in, and has to learn, applied technology and coupled with industry knowledge, that is the opportunity which people come in for. Coming to your answer on realization, I think with digital engagements which are increasing, and you are seeing the growth every year, there is an improvement on the realization on a case by case basis. There are certain engagements, very large engagements where we take some strategic decisions, and so realization may not happen in certain ones, but it's a mixed bag again in terms of realization in digital engagements.
Okay. Final question, and the management of any company. And a company like TCS will never focus on weeks and quarters. They'll focus on years. They'll look at multi-trends, right?
That's right.
Where do you think the wage inflation cycle in India for IT industry is there? A couple of years ago, because what was happening in the startup world, the wage inflation in a sense went haywire. This is 2019, FY20, FY21, 22, 23. What kind of uptick do you see in wage inflation?
So I think let me respond to it slightly differently. We actually are linking careers with learnings and with how people are learning, how they are bringing up. So what they bring to the table will actually depend on how much they earn. It's basically as simple as that. So by doing that, by bringing in more and more differentiation on that front, I think we'll be covered from the overall wage bill standpoint. From an inflation point of view, I think that trend will continue, and we'll have to continue to manage that.
So let's say if inflation, which was at 5 to 6%, Ramki, RBI has finally managed to bottle the genie of inflation. So can I historically assume that inflation has come lower, so wage inflation always will be lower? I mean, that's simple to put it across.
I won't put it exactly like that, but we have to play it by the ear and put our models, tweak our models in such a way that we can deal with that.
And then I thought, I'll be able to throw some bouncers at you, but you managed to dodge all my questions directly, indirectly. So it was lovely interacting with you, Ramki. Always a pleasure. And with that, I'll hand it back to the studio.